G'day traders, Stacey Burke from Stacey Burke Trading. Today talking about my trading process before each session. And I think this is critical to understand just when I head into each session. I'm just looking for a basic, simple setup on one of the major pairs. And I may get it on a couple of pairs. But I think there's some confusion. Traders are emailing me questions about, all kinds of different things. Sentiment, multiple time frames, all kinds of stuff, and I just want to hammer home. I'm looking for a simple setup, and it's either they break the high for a sell setup, they break the low for a buy setup, or am I in a trend day situation? And essentially, I'm looking for the consolidations. We're going to talk about that today, the major round numbers. I'm just identifying my consolidation, and then is it a sell possibility setup? Am I inside of the high and low of the week? Am I near the high and low of the week? So if it breaks the high and it goes higher, am I looking at a sell high setup at the high of the week? Is it a trend day? Is it an all-in day? Just simple things. I'm not looking at all these other things and trying to hold on forever. I'm looking for 50, 100, maybe 200 pip move, depending on if I'm at the high or low of the week and on which pair. So again, simplicity. I'm looking at scalable opportunities when the market triggers breakouts at the high or low of the day. I've mentioned that I'm biased to the short side. So even sometimes in strong markets, in strong long markets, there will be fantastic sell opportunities, and the same goes for short markets. So we have scenarios right now where we have the US dollar strength. A lot of the major pairs are getting sold off heavily. Okay. We're seeing gold, NASDAQ, oil, some of the other indexes move in very large moves. There's going to be some fantastic opportunities. Is it going to be every single session? No. And again, we'll talk about that today on the major pairs, my process. So just to review quickly, the timings are critical. Now, I'm getting a lot of questions about timings. I'm gonna say this again. New York Eastern Standard Time. 8 to 11 p.m. for the Asian box. Now, I basically very rarely will trade Asia now. I mean, sometimes on a Monday, we're going to see rollovers, we're going to see big moves, we're going to see gaps, peak formations, high and low of the week, that sort of scenario. But I'm quite content to let the day set up. Most of my trading is on gold and oil or NASDAQ. And typically, again, on a Monday, we're going to see some great moves, possibly in both Asia and London. But obviously, by the time New York comes on board, the week will really start to have maybe generate some momentum. Sometimes Monday can be a low-range day if they're flipping the book or if they're just establishing their consolidation or their trading range or their preparation for the week. So I'm looking for opportunities that are heavily skewed, or the possibilities are heavily skewed in my favor. I'm not trying to guess. I'm not trying to predict. I'm looking for just simple setups. So again, at the high or low of the day, ideally high of the month, low of the month, high of the week, low of the week. We saw some fantastic moves last week. We're going to see them again this week. Now, this is what I'm going to hammer home on today. Identifying the consolidations. This is critical. If you can master the consolidations and understand the major round numbers, you'll really grasp this, because then you'll see the peak formations, you'll see the stop hunts, the breakout triggers, and then the trade setups. Sometimes they're going to be trend days, which again comes back to, if it's an all-in day, we're still going to have a geometrical structure for a possible measured move or a great trade setup in the next session. So, for example, London may be the middle of the range. New York may put a peak formation in place. We'll look at an example of, even in a strongly trending market, how there can still be a great 25 pip trade. Now, I like to short weakness. If I'm going to go long, I want to be going long strength, because I'm not interested in fighting the market. But when the market is set up right for a capitulation type trade setup, I'm looking for that. Those are easy trades. Engulfments, pin hammers, that's what locks in our triple tops, our M's, our W's, our final flags. 3-push patterns, same thing, cup and handles. But it's all about identifying the consolidations, and then the timings. So when we glance at the pound last week, the British pound, the pink line again represents our Friday-Monday separator. Now, we've talked about the 3-day setup. I get comments all the time about the hard right edge and reading the charts. And here's the thing. Your preparation is everything. The setups are going to be the same over and over and over again. You're either going to be selling, buying, or doing nothing. Or if you're in a trading range, you're selling high and buying low. If you're in a trend, you're going to be, again, if it's a long trend, you're going to be buying low in an uptrend, selling high in a downtrend. If it's a false break, you're going to sell the high or buy the low. Very simple. You're doing one of three things: buying, selling, or doing nothing. So when we go back and we look and we again focus on, my major focus is on identifying the consolidation and then forming a thesis around that consolidation. Have they put a peak formation in? Now I focus on 50 pip boxes, especially with the major pairs. Now we've talked about 1, 2, 3s. Now 1, 2, 3s, 3 levels of rise, 3 levels of fall on the major pairs. I'm going to just put this number down. I want traders to understand that when a market moves in the major pairs, 3 levels, that's 75 pips, we can have an opportunity setting up. Monday, Tuesday can set our initial balance for the week. So if one major pair gave me a 25 pip capitulation type trade that was scalable in size, a decent sized trader on 25 pips can make more than most retail traders will make, making 200 pips, trying to make 200 pips in a week. So understand this, it's about scalability and the ideal trade setup. So if we come back and we just look at our Monday, Friday, again, no previous day's highs or lows are hit until we get into the London session on the Monday. So the first thing I'm looking at is my major round numbers. I'm looking for 3 levels of rise or fall, possibly on a Monday, a previous day's high or low broken, because now we know we have breakout traders triggered into the market, other time frame traders triggered into the market. The market proceeds to turn and auction down from the previous day's high, London session on the Friday. So in this particular case, whether you shorted this or not, the first thing you could possibly identify is that this market may have put in a peak formation above 75 on Monday. The market proceeds to auction down below the double zeros towards Monday's low. Now, it's possible that this could be the high of the week. So really understand, Monday, Tuesday, 80% of the time will form the high and low range for the week. One of those extremes may hold as the extreme for the week. In our 3-day setup, so coming into each session for London and New York, the first thing I'm looking at is I work from 50s and zeros. So what that means is that if I'm selling down, I want to be selling above zero for a move down. I'm going to be selling at 50 or above 50 for a move down at the high or low of the day. So when I come to the U.S. session, I'm clearly inside the high and the low of the day. The market possibly has put in a peak formation. This is a great example of where, when I head into the U.S. session on a Monday, it's possible this market could completely trade down to 50. So if I was looking for a short trade, coming back to understanding that first hour will put in a high or a low, but I'm looking for a boundary to be locked in. So if my thesis is that the high of the day is locked in, I would only be looking for shorts near or at or above the high or low of that session. Now this is outside of my time frame window, and this is not my ideal setup because I like to work at the high or low of the day. So this particular instrument, if it was on my list, would already be to the side. We're broken down, but I need it to be going off of numbers, and ideally if I'm doing anything, I'm selling above zero for an anticipated move down to the next major round number. My next major round number is 50. Now, 50 could end up being our low. They might go down to 25 before I get a trade set up, because we talk about most stop hunts are 25 to 50 pips above a range. So if the double zero box is possibly the trading range now for the week, the 100 pip range, they've gone up 25 plus before locking in the high, consolidating, and dropping down the next day. If I'm looking for a sell setup now in the London session, I would look for something to possibly break up above zeros for a sell high. They have come down, though, and broken the low. When they break the low in that first hour and put a low in place, they're getting people to buy the open of the London session back up. So this maybe had been a small scalp for traders looking to buy the low of the week in anticipation of this possibly going back up to the high of the week. Again, when they do that, London puts in a low and they come back up to the high of the London session at the end of the Asian range, and in the gap time proceed to go back down to the low. Now when we head into the US session, we have a low of the day in place. The first hour locks in a low, and then we have a creeping trend down into the low at the New York Open. 15 minutes false move into the open for an engulfment pin hammer. Sorry, let me just zoom back here. Engulfment pin hammer for a 50 pip move back up to the high of the day. So this is an example of a low of the week, low of the day, low of the month trading opportunity in a broken down market, which is a coil, 1 push, 2 pushes, 3 pushes into the low for the explosive move. Lower high put in the first hour. A lower high back inside. This is the low. We work from the low and the high. We work from the low and the high. They did not go to the high. They proceeded to auction down. Traders may have taken a long trade at the open of London on a smaller time frame for a move back up. No problem. But the understanding that this could fail into that peak formation put in at the end of Asia. But the trade at the low of the day, low of the week is a nice 3-push coil over 3 sessions. This is an example of a 3-session trade setup. Asia, 1 push. 2 pushes in London. They extend the range down with a 1, 2, 3. That's the 33 for an explosive move up. Now we have a high of the week and a low of the week in place. Day 1, day 2. Day 3 is inside of the high and the low of the week. We're above zeros when the session opens in the Europe session. They go above zeros and lock in a high. It's possible we could be looking at a sell high opportunity above double zeros or at double zeros for a move back down to the low of the week. We have 25.25. This market possibly could push down another 25 to extend the range lower in our weekly cycle. The market puts in a peak formation and locks in a high, pulls back and retests. So traders that shorted this would have been in a creeping trend for a 25 pip move down to the low of the Asian session. It then proceeds at the beginning of the New York cycle to lock in the low and come up 1, 2, 3 into traders that are short just above double zeros. Now again, this is on a 15-minute chart, but the pattern, the preparation are all the same. Where's my high? Where's my low? I work from double zeros and 50s. So they go above double zero and lock in the high. I'm looking to sell high at the high of the day, at the high of the session, or at the high of the 100 pip box, 50 pip box, for a possible move back down to the low of the week. This lower high from the previous day could be considered now the new lower high of the week. This is an ideal trade setup. This is right at the beginning of the second hour headed into the New York Open. We now have a market that is making lower highs and lower lows on the daily chart. The next day the market moves in Asia, again from 50 down to double zeros. Traders are either looking for a buy off of double zeros or recognizing that this is now putting in peak formations above zero for an opportunity to sell right off the beginning of the session, or wait for the market to break out down lower, pull back at the London Open to short that market in a second day trade for a measured move, not only of that consolidation, but we also now have a day 1, day 2 high-low from the high and low of Monday, Tuesday. We'll just mark that on here for traders. It doesn't matter what instrument I'm following. I will look for the same process when this opportunity presents. Monday puts in the high, Tuesday puts in the low. They pull back inside and go into consolidation. They break the high, trap traders long for the sell, pull back in New York into traders that are short, locking in our peak formation, dropping down through the low of our consolidation geometrical rectangle for a measured move. This is a gain we talked about the beginning of the month. The end of February heading into March, we can see large moves develop and set up into the beginnings and ends of months. So we head into the end of the month. We have our low of the month, and the market pulls back inside and goes into consolidation, locking in a peak formation. So the first thing I'm always looking at is, where are my major round numbers? 50. We're heading into London. The market possibly now has locked in peak formations below 50. My thesis then would be that we're looking at a possible move back up to the high not only of the previous day or the last peak formation made in the U.S. session. So count again how many levels of rise and fall we could see. 50 to 75, 75 to double zeros to 25. On the Monday, that's 3 levels of rise at the beginning of the week. We possibly have locked in a peak formation low. Now I'm looking at an average range of these pairs. 3 levels of rise, that possibly now may be putting in a peak formation high for us to look for a sell setup into the beginning of our next day or our next session when we come up towards the double zeros and the high of the week. The same setup, Monday, Tuesday. There's our M formation, possibly at the beginning or high of the week, which again would tell us that if this market gives us our 3-day setup, we could be looking at the same type of scenario. Day 1, day 2 set the high and the low. Day 3 pulls back into consolidation. In this particular case, the market made a day 3 low. So now we have a Tuesday high, a Wednesday low. They've pulled back into consolidation. Our major round numbers at this time now are double zeros possibly locking in the low of the week, and double zeros possibly locking in the high of the week. I'm looking for the consolidations. And when you step back and look at the major round numbers heading into each session, you can form a thesis based on how price behaves. When they break out, I'm looking for the opportunity. Now, if we had had a trend trade at the beginning of the session, you'll notice this market moved before the session began. That tells me we're possibly going to be locking in a low, even if it's for a 25 to 50 pip move back against the trend. The U.S. session continues to stay inside of the high and the low. They break out of the high in New York and come back 25 plus pips into traders that are long. So again, identifying creeping trends into market session opens. This is a dead giveaway that these traders chasing the move higher up are going to get stopped out or put heat into traders that are possibly in the right direction. But again, double zeros and 50s. I'm looking for my trades at the session timings, at the higher low of the day, the higher low of the week, at 50s and double zeros. If I'm inside of those numbers, then I'm looking at, is the higher low already locked in? If it is, I'm going to be selling high above the numbers in line with the move down. So we were selling the pop-ups above 75 for the move back down. Again, the market goes into consolidation below 50. So in simple terms, I'm marking off peak formations. We're looking at 50s and double zeros. That's telling me we could be getting a sell setup right at the end of that window of Asia heading into the Europe Open for a move down. The market breaks out in an all-in measured move. I can only short this market, and these pins on shorter time frames are the pop-ups into the double zeros on the 1-minute chart. So if you're not sure, the market goes down, it auctions in and locks in the high. It gives us a lower low. The market pulls back again one more time. At the end of the first hour, there's our engulfment pin hammer for the move back down to the low. 50s and double zeros, I'm looking to identify my consolidations. Every session, every pair. The easiest way for me to do that is where's my 50, where's my double zeros. I'm looking for trade setups at the high or low. So in this particular case, we can see right off the bat the trade came off at 25 on the euro. And that is at the high of the day, inside of a peak formation, locking in the high 25 pips above our double zero box. So keep it simple, traders. I'm not trying to make things complicated. I'm not worried what week it is. I've talked about looking at my daily chart for the bias, but how the market behaves when it opens, I'm looking for sell highs and buy lows. I want to know markets that have moved 25, 50, 75 pips. I'm looking for markets to burst the high or burst the low. Then I have my thesis already. Am I expecting a move 25 pips above that range? Am I expecting it at the high of that range? Or 50 pips above that range? You know, the NASDAQ has given some huge trades, as is gold and oil, but again, you can just see, just step back. Where's my consolidation? 50s and zeros. Asia extends the range out. They put in a peak formation below zero. I'm looking for something around 25 or 50. We know that traders are short from the beginning of the rollover of the day. My major round number box is a 200 pip box. If we extend this out, the market has moved 3 levels, 100, 100, 100. Did I know that they were going to give me something up at 50? No, I did not. But London bursts out, breaks through the 25 and pulls back. London opens and continues to go back and retest the high at 50. They pin into 50. They go into consolidation. They give me the bear pin hammer right near the end of the second 15-minute bar of the London Open. We're 50 pips up above the range. I'm looking for not only a trade that may retest the low of the session, but one now that possibly could go all the way down to the double zero box. And because I'm shorting a market that I believe has the potential to go lower, I will watch how it behaves. This is a running wedge pattern. Take some off, leave some to keep going. It blows off and locks in a low. Now we watch, is it locking in a low below double zeros? I've got time decay. We're into the third hour. I know this market could potentially come back up and hit stops or go back into the market. I'm not greedy. I've already taken the majority of the trade off near the low of the day. When we get a third push to the bottom, I'd be finished and done in that session. Come back in New York and look for a similar setup. They burst the high, put a high in, London opens and retest the high, they lock it in and fall all the way back down to the low of the session. So coming into your session, have your levels, have your consolidations identified. Major round numbers are the areas where I look for my best trade setups. Be prepared. It's going to be a great trading week. Keep it simple, traders, and may the markets go with you.
Hi, traders. It's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.